Wednesday, January 29th, 2025, and another FOMC day is in the books. Now, when I made my video yesterday, I cautioned traders not to trade on FOMC days, at least during the time just before and after the announcement is made at 2 p.m. because the market becomes very volatile. Now, typically, I also recommend that traders pick one market to trade. I trade the S&P E-minis, and I've been doing it for 20 years. And I recommend that traders trade one market because markets have a characteristic. They're sort of like people. They have a certain way of moving. And I have a sense of how the FOMC moves, and I'm sure many traders who also trade the FOMC will agree with me. During the morning, the market trades in a relatively narrow range, and as the 2 p.m. announcement time approaches, the market becomes increasingly volatile, and then just before the announcement, the market gyrates wildly up, down, and then in doing that, if you trade during that time frame, you can lose money very quickly and a lot of it, or make money very quickly and a lot of it. But why take the chance? Why take the risk? There are much better opportunities where the chance of trading success is greater and without the risk that FOMC volatility brings into the mix. So how did the market trade on the FOMC day today, January 29th? Let's go through it minute by minute. And after I take you through it, I'm going to go through what I said yesterday and how today's price action compares to what I told you would happen today. Okay, in the morning, market is trading in a relatively narrow range, not too volatile, okay? And as we're approaching the 2 p.m. announcement time, notice the market volatility picks up, gyrates down, gyrates up very quickly, okay? And there are 10 points in between each horizontal line, just to give you a frame of reference. Okay, here we go. And there we go, end of day. So I'm going to stop the video here, and I'm going to take you through it and show you that what I said would happen yesterday when I made my video prior to today is exactly what the market did. Okay, so at 2 p.m., let me take you to the 2 p.m. bar right over here. It's 2 p.m., 1400 hours, and the opening bar, market opened at 60.6525, all right? Let's go to the closing bar at 4 p.m. Remember, opening bar 60.65. Closing bar opened at 60.68, all right? 3 points difference, only 3 points, virtually identical. Because the FOMC announcement was almost assured to result in no change in the Federal Reserve funds rate, the market closed exactly where it was, or just about within 3 points prior to the announcement. And so compared to the time just before and during the announcement, the market traded in a relatively narrow range in the early session, and then in the afternoon, all hell breaks loose. You can make a lot of money, you can lose a lot of money. Why take the risk? So FOMC days, I highly recommend that you don't trade FOMC days, and also trade a market that you're familiar with, because then you know what to expect. Of course, you never know what you can really expect in the market. Markets are unpredictable. FOMC days are a lot more volatile. So that's my video for today. Thanks so much for watching. Trade safely, use lots of patience, and I'll see you in my next video. Marv Eisen for Timeless Dollar Trading Academy.